Hello, everyone, and welcome to this morning's morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM, and today is the 23rd of January. All right, just going to go ahead and bring up our disclaimers. Let's just start off here with the high risk investment warning. I'll just get the camera out of the way there. Yesterday, I believe the chat feature was off. Apologies for that. When you set up these live streams, you have the option of turning the chats on and off. I want to keep the chat on, but I think yesterday I must have set up something incorrectly. So apologies for that. I'm just going to keep the high risk investment on a little bit longer. All right, let's just go ahead and take a look at our market commentaries disclaimer. Hey Raj, good morning to you. Lovely to have on the live stream as always. All right, that's great. Let's just go now and take a look at the real rate. This is generally where we want to start the analysis. And the reason we want to start the analysis there is because the real rate is effectively a key driver. Now, something important is happening in the markets. And how this affects the market direction, is something that we've got to try and ponder as traders. The idea here is that the chances of a rate cut for March, the March rate cut, a week ago was over 60%. A week and a day ago, it was over 70%. That's repricing. It's under 50% now. Okay, it's gone down to 44.3%. The chances of a rate cut have diminished exceptionally, and that is something that we have to stay on top of. So, in other words, the chances of a rate cut now are starting to be pushed back. The next chance is going to be, hey Kim, good morning to you. The next chance of the rate cut is going to be in May. Okay, so it looks like the March rate cut is now being priced out of the market. And that's not surprising. If we take a look, so we've got the real rate, and I'm going to go down from the daily. I'm going to go to the 4-hourly. Okay, so we'll go down to the 4-hourly. And on the 4-hourly, you can see that the since about January... since about the 12th of January, you can see how the real rates moved up. That's that repricing. Okay, that's the repricing of the rate cut. So now we're 44%, right? In other words, there is a greater chance of a hold in March than was previously thought, and we're seeing that repricing. Particularly, we're seeing it reflected in the currency markets. One would expect where it's not being priced in is in the stock markets. Now that is very, very interesting because according to the time value of money, the time value of money includes interest rates. It includes interest rates. And if there is a pricing of interest rates or yields higher, there should be a pressure. There should be a pressure on the S&P 500. We're not seeing that. I'm going to share the S&P 500 here with you. Okay, this is the weekly chart. I just want to write a message here to Kim. Can everyone hear me and see the picture? I just want to double check. Kim's saying he can't see the picture. Can you guys see the picture? Just let me know. All right. Because as far as I can tell, everything seems to be okay. Amy, yeah, okay. Hey, Raj. Okay, cool. So what we could do here is consider the stock market. Remember, what's the underlying sort of driver that we're analyzing. Okay, what we're trying to do is we're trying to understand the repricing of the interest rate. It's pushed down, but if you take a look at the stock market, the S&P 500 pushing higher, S&P 500 pushing higher, and if we go through to the if we go through to say an hourly chart, go through say to the hourly chart. So I share the tab of the hour. Just look how strong that momentum is. What we're doing is we're looking at the stochastic here, and the stochastic is really staying in that upper quintile. And if it stays in that upper quintile, well, that's momentum. Now, what we've got to be very cognizant of, if there is any news that comes out that is bad news, given the repricing of the yield, I think the stock market's going to take a beating here. Okay, I think the stock market. So if you've traded this particular, momentum push over here, then obviously well done to you. Okay, well done to you. But just bear in mind, because of the repricing in and the time value of money of the yield, it's time to be careful. It's time to be careful. And there are a number of data points this week that can potentially have an influence on the market. So the data points are, on Friday, we're going to get the core PCE. Now, the market's of the opinion that inflation is going to moderate. The inflation number is going to come down. If we get a hotter than expected inflation print on Friday, I think that's going to hurt the market. Okay, there are flash PMIs that are coming out tomorrow. If those show weakness, I think that potentially can hurt the market. We're also going to get GDP numbers and core durable goods on Thursday. So there's a whole lot of data that is going to have to be discounted into that the market, because it's riding on momentum at the moment. It's really riding on momentum. If we take a look at the daily chart, okay, so let's just take a look at the daily chart. It's sitting, let's zoom in here. It's sitting nicely in zone 1. Zone 1 is our bullish area. Zone 1 is between the upper blue and the upper red band. Okay, and it's starting to expand out as the volatility increases. Can you see that the Bollingers are starting to push out? You've got a Bollinger moving this way, got a Bollinger moving this way, and you've got a Bollinger that's also moving this way. That's an expansion of volatility. Well, if there's an expansion of volatility and it carries on moving in zone 1 between the upper red and the upper blue, that's first prize. That means there's a risk on movement in the market, despite the fact that interest rates are being repriced. The rate cut's been priced out. And that's an anomaly. So we're basically riding on momentum here. And if we're riding on momentum here, okay, well, that's not a good enough reason. If there is some fundamental data that comes out that is poor, it's gonna hurt. Okay, so just be cognizant of that. Let's take a look at the RSP. The RSP is an equal weighted index. Here we're just looking at the S&P 500. That's the market cap. Let's just take a look at the RSP and see what's happening with the RSP. If it's pricing quite as strongly as the S&P 500. Okay, so we'll go through to the weekly again. And what we'll do is we'll just change SPX 500. Let's just go into RSP. Okay, and that's the Invesco S&P equal weighted ETF. Okay, so this is interesting here. It's not as strong. It's not as strong as the market cap index, but it does look as if we are getting a bounce off of support here. Okay, and what we can do is we can take a look at the daily chart and just take a look at RSP with regards to our zones. Okay, so where is RSP sitting when it comes to the zones? It's a different picture. So the RSP is only in our neutral area. It's just only in our neutral area. S&P, I just want to make this point here. S&P 500 is being driven by a few large cap companies. That's in zone 1. That's in the upper blue, and that's in the upper red. That's in the bullish area. RSP, which is equal weighted, that's sitting in zone 2. If it's sitting in zone 2, we're not getting the total index performing. And if we're not getting the total index performing, okay, I think that is reflecting the fact that the yield, the March rate cut, is being priced out. In other words, perhaps it's the technology. I think there was some good semiconductor news that came out last week, some good semiconductor forecasts that came out last week, which can be driving sort of the larger cap IT type tech companies. The broader stuff not looking quite as comfortable. Okay, so just a heads up there. Riding on momentum alone is risky. Okay, we need to see effectively. I'm going back to the real rate. We need to see the real rate really break this upwards trajectory. I want to see the real rate come down. If we get that real rate coming down, that's the tailwind for the risk on move. If we get that risk on move, I think things would be a lot more comfortable for us. All right. The fact that the real rate is moving higher, let's just take a look at the majors, see what's happening, see if the euro is giving us anything. So I'm going to go through to the daily chart on euro, and I'll share that tab with you. And then, all right, let's take a look here. Okay, this is euro. All right, so you can see as the market is pricing out that March cut, there seems to be some pressure on the euro. Makes sense, because the pricing out of the rate cut in March, lifting dollar, so to speak. Well, if it's lifting dollar, it's pressurizing euro. So we're in zone 3 here. We're in zone 3. So if we're in zone 3, what we can do is we can go down to our hourly chart. We can just see if there's any sort of resistance areas that are going to give us any potential opportunities here. Okay, so let's just go down to the hourly chart here and see what kind of technical signals. All right, so this is euro on an hourly. Given the fact that it is sitting in zone 3, okay, perhaps we've got some sort of resistance here that we can take advantage of. Let's just put in some resistance. Okay, so some sort of resistance here. If this resistance is going to have any effect, we're going to have to see the stochastic rollover. And not only are we going to have to see the stochastic rollover, what we're going to have to see as well is the EMA is crossing down. So the EMA is crossing down, stochastic rolling over would, let me just make this clearer. Okay, sorry, I think that the camera was in the way there. But the idea is we're trying to line up a few things here. What are we trying to line up? We're trying to line up the fact that there is now a rate cut that's been priced out. A week ago, it was over 60%. A week and a day ago, it was over 70%. Now it's 44%. Well, if it's 44%, in other words, there's more chance of not cutting than cutting. There has to be some sort of market repricing. If there's some sort of market repricing, then we would expect dollar to be supported. And if dollar is going to be supported, expect euro to be pushed down. So we've got this resistance area here, and let's just keep an eye on that. Don't predict, react. Don't predict, react. So in other words, we need to see these technical signals. We need to see the technical signals first. Let's just take a look, see what's happening on the dollar front. Then we'll take a look at gold. Then we'll take a look at DAX. Okay, so let's just take a look at dollar front. We'll take a look at dollar on the daily time frame. Okay, just sharing dollar. Okay, so you can see dollars in zone one. It's in the bullish area between the upper red and the upper blue. Well, if we're between the upper red and the upper blue, we can go down to the hourly and we can see if there is any sort of support that is going to potentially bring in some of the dollar bills. All right, so let's share this. Okay, so this is interesting. Dollar's actually getting sold off at the moment. If there is going to be any sort of synchronization between the lower time frame with the higher time frame, then we would need to see the EMAs cross upwards. We would need to see the stochastic move from the lower quintile to the upper quintile. Okay, so no hint of that just yet, but that would effectively be the repricing of the yield being pushed from a rate cut in March through to a rate cut in May. Just bear in mind that there is calendar data that can affect this. PMIs tomorrow, GDP Thursday, core durable goods Thursday. Most important, PCE Friday. PCE Friday. Okay, let's just take a look and see what's happening on the gold front. Then we'll take a look at DAX. So we'll go through to gold first. We're taking a look at gold on the hourly time frame. Okay, if gold, if the dollar is going to find any sort of support, if there's going to be any sort of support, we can look at resistance areas here, because gold would be moving in the opposite direction, would be in the opposite direction to the dollar. Stochastic in the lower quintile is slowing down. Just in which chart there, Mia? Yeah. I see what so you're talking about the dollar. So the fact that the dollar, let's just go back there. So what I'm saying is it's not a sign of slowing. It's actually a sign of acceleration to the downside. If there is going to be a repricing in the dollar, and there's going to be a reflection in the dollar of strength, because the rate cut is being pushed from March through to May, then that stochastic will have to roll out of that lower quintile. It will have to move up here. So what I'm saying is, don't predict, react. In order for the dollar to reprice higher, why would I say higher? Just because the chances of that rate cut are being priced out for March. If they're being priced out for March, one would expect that would support the US dollar. But in order for it to support the US dollar, we have to see the technical signals. What would be the technical signals? Stochastic moving up, exponential moving averages moving up. Okay, let's just go through to gold XAU USD. That would if okay, so it's a capital R, capital F. If there's going to be a repricing of the dollar upwards, one would expect a repricing of the of gold lower. So we're hitting a resistance area here. We'll need to see some sort of crossover, cross down, the green EMA crossing below the orange EMA, and we would also need to see a push down here. So that would be sort of in line with the higher for longer narrative. Okay, the higher for longer narrative is kind of where we're starting the analysis, and now we're looking to see if the technical signals cooperate, if they comply with that. Okay, I don't want to predict, I want to react, and so I'm looking at movements on support and resistance to see if those happen or not. All right, very last chart for this morning. Let's take a look, see what's happening on DAX. Now remember, the stock markets, they actually been driven on momentum. They've been driven on momentum. So the fact that they're being driven on momentum, to me, is quite worrying because it doesn't seem to be sort of anchored to any sort of fundamentals. Okay. Okay, Anna, how's the YouTube live stream? Is the YouTube live stream working for you? Just let me know. Okay. Um, what we can take a look at now, I want you guys to be very careful when it comes to, I want you to be very, very careful when it comes to stock market because it doesn't seem to be underlying fundamentals. It's running on momentum alone. It looks like we're going to have a momentum run here. Why do I say it looks like we're going to have a momentum run here? Because we've just hit this upper quintile, and I think if we hold the upper quintile, okay, if we hold the upper quintile, then the momentum run on the stock market continues. But there's a dichotomy, there's a breaker, there's a divergence. Okay, Raj, see you tomorrow. We're gonna wrap up here in the next few moments, Raj. Okay, let's just conclude with a summary. The summary is that it looks as if the rate cut's been pushed from March to May. That needs to be repriced. How is it going to be repriced? To me, it seems it's going to support the dollar. Theoretically, it should be acting as a headwind against the stock markets, but it's not. The stock markets are running on momentum. I think that the dollar, though, is reflecting the pricing better than the stock markets. And that's kind of what we have spoken about this morning. All right, that's where we're going to leave it for today. If there's any questions, go ahead and type those in. If there are any questions, go ahead and type those in. If there's no, sorry, I missed this, Kim. If there's no rate rise in March, then the US should move down. No, the US dollar should move up. If there's no, sorry, not a rate rise, Kim. So we're not talking about a rate rise. We're talking about a rate cut. March was pricing in a rate cut, not a rate rise. Okay, does that make sense? So if there's no rate cut in March, US dollar should move up. Be aware, we're not talking about a rate rise, we're talking about a rate cut. All right, any other questions there, guys? All right, let's wrap up here, guys. Have a good day ahead, and we shall chat tomorrow morning. Thank you very much all. Speak to you then.